All right, everyone, welcome back for another episode of Carnivore Trades. It is Master Trader Series Episode 2. Today, we have a very awesome guest here, big Twitter following, runs a Telegram, great crypto analysis. And got to thank you for coming in on short notice. We had a lot of news today, and we talked about doing an interview a couple of times, and we kind of just shot back and forth. And then today, with everything happened, I was like, let's just get this done now. And that was a few hours ago. We're doing this video really right after the big blow up earlier today. But crypto fundamentals, how are you doing here?
Good. How are you, Aaron?
Awesome.
Thanks for having me on. I love your channel.
Awesome. Appreciate it. Yeah. So we'll get right into all the all the main stuff here. First, tell the listeners a little bit about your background, maybe your trading style.
Sure.
Kind of where you came from as far as trading,
All right. I started in this. Yeah. Okay. I'll make it shorter, a shorter version.
We could go for a while,
Yeah.
Yeah.
I'm a nurse practitioner by trade. And I have a DNP and I work with inmates in prisons, mainly psychiatry. But in graduate school, I got involved in cryptocurrency. I don't even recall exactly what brought me into the field, but I started looking at it. I invested money, lost all my money, right, in 2017, 2018. Kind of hung it up for about 6 months. And then, it really captivated me, a lot of it, the technology and, of course, the financial perspective of it and possibilities. And so I went back to it and I started learning how to read everything, the blockchain, learning the tech. And that's kind of how I started. I didn't have a lot of money. I started in that sector and then finding good investments and then I slowly started writing about these things and trading over time. And over time, people seem to like what I had to say. My following's all organic. I don't do any engagement farming or anything like that. But over the last probably 16 months, I've been doing a lot more trading. My style of trading is mainly swing failure patterns, level to level, point of controls. I don't use a lot of candles. I don't use a lot of lagging indicators. I'll use them on a high time frame somewhat.
Mm-hmm.
Or like a BBWP, a volatility indicator. I'll use that too. And then I'll do a lot of day trading with it as well, just the levels. Maybe not too much, one trade a day or so. I find if I trade in the afternoon, I do much worse than I do in the mornings. Like my initial setups and trades and plans work very well. And if I push it, right, it just, so I only take one or two a day. It's over trading at that point. And that's kind of my background. Sorry, Aaron, go ahead.
Well, I was just say one thing I always tell newer traders is just trade the open. Don't trade the lunch hour. There's no liquidity there. You're going to get spun around. You're going to see something that's not there. Just leave it alone until you have experience and you can do that, Right.
Yeah, exactly what I learned the hard way. So for those of you out there, listen to Aaron.
Yeah, well, I was going to say, you kind of what you said did resonate with me a little bit. I mean, it's a similar thing. I got into trading and blowing up an account, blow up another account, go back to work full time, gave up for a while, then got back into it. So and that's kind of really part of what the series is about, is trying to let everybody know, hey, like I was at your place at one time, but you keep plugging away, you can do it.
It is kind of a calling, not in like the sense that it's a duty, but it's just it's kind of this internal kind of thing that you gravitate towards. And it's not just the money either, because there's certainly other things you can do for money. I don't even work. I barely work as a nurse practitioner anymore, and I make great money. I just do full-time crypto and trading because I love it, and it's flexible and with my family and everything else. So
yeah, it's very, very rewarding, and you can answer to yourself. So
absolutely, that's the beauty of it.
Yeah.
So, but that's kind of my background. There's not, there's not a lot else there. It's pretty basic, it's everything kind of, you spend years collecting data and everything kind of clicks for a while, where you were able to do one or two things really well, and you stick to those while you're still collecting data and progressing in other ways through the space. And that's kind of how it works. So
and just build from there.
Mm-hmm.
Yeah. All right, cool. So let's get into it. So obviously everybody's heard FTX basically blown up.
Yeah.
Binance offering to buy them out. Can you kind of give people a little bit of background of kind of the basis of what's going on here for somebody who maybe is a little bit kind of curious as to the sector, doesn't really fully know what's going on, but wants a layman's terms explanation here?
It looks as though FTX has been insolvent for some time, which means they don't have the funds for their users, right? The digital funds for them to turn into cash, basically, in a nutshell. They've been allocating funds we don't have the full story yet here. We won't see, I imagine we won't see like the exact details of every detail for a little while. Same as Luna, right? But they were making poor investments. They were using their own token to leverage the market, right? They were trading against. There's rumors. I haven't seen evidence of this. There's rumors they were using data to counter trade the members or the traders, but they lost all their money. So I'm not sure how. But one thing I remember is a couple of weeks ago, some guy made a breakdown of all the exchanges and which ones are the most expensive. And FTX was by far and large the most expensive exchange to trade on. Now it makes a lot of sense.
They were using data to fade their own traders or their own members.
That's a rumor. I'm not sure though. If that were really true, if you had all that data, how could you lose?
I mean, I've heard of some shady things before. You know, I've heard of people fading other people's, but like your own guy, like that's. I
don't want people to believe this quite yet.
Just what we heard, right?
And you have to be pretty terrible at it to lose all your money. But I've seen some of their investments too that they made in crypto, and they were terrible. You know, a lot of money flowing out, not a lot of checks and balances. And one thing we've learned this year, and it's every cycle, there's people who are in charge who should not be in charge. It happens every time. These guys couldn't balance a checkbook, and they're in charge of billions of dollars. And I don't get it, because I know very amazing traders who are very well focused, who have like 1,000 followers, and they could run circles around these guys running a company. Right?
Absolutely. Absolutely.
It's a mystery.
And some of these guys, and the guys that the ones that with the millions of followers and the CEO title, you know, they're the loudest ones often. And a lot of the time when they're wrong, they, you know, never admit it. But, you know, like you said, I know tons of guys right now that a lot of don't even use Twitter, or they use it and just follow other people. And I mean, they're as good as I am or better. And like they can, like you said, run circles around the guys with 500K followers. And, you know,
absolutely.
Yeah,
absolutely. And, you know, so back to the story. So insolvent. So apparently they didn't have the funds to pay all the users. They turned off the withdrawals. So there's people like, you know, these 8-figure guys, you know, you see them just kind of, and I don't blame them, making statements about how their money's locked on the exchange and the withdrawal process has been paused, and they don't know if they can get their money.
They say that every time.
You know, but it's easy.
We can't have access to it now, but you know,
I don't keep it there.
Don't pull your money. Don't pull your money out. You know.
Same as banking. But like if Binance Exchange buys them, however, the deal's it's not a done deal yet either, right? It's not inked yet. Nothing's official. But he's pretty, you know, I don't like a monopoly, so I don't really want to get into that. But he has a history of being somewhat reasonable. So maybe there's a chance for these people to get their money in some way, shape, or form. But I'm not sure. But yeah, they were using their own token to float other things and to buy other things, leveraging. You know, it's bad. It's and I don't understand how this is happening. It's like the worst business model in history these guys have had. And that was Alameda too. Apparently they were bailing out Alameda with some of their funds. And that's their kind of sister holding company, right? And you know, and so it's a bad deal because all this liquidity was tied up in their exchange and they didn't have it. So when that happens, a lot of other things have to unwind, and it's usually a timeline that takes a little while. So, you know, similar to Luna, you just kind of got to get out of the way and see what happens, because you don't know what else was tied to their holdings and what they don't have to pay people with, and that's going to make other companies unwind. And even traditional finance, I'm hearing that institutions were somewhat, you know, involved here. And to what degree, I have no idea.
Yes. So that actually brings me almost kind of what I was going to say next. And I'll preface this just a little bit. I talked about it several times today on my own channel, but this, I'll ask you, does this appear to be contagious across broad financial markets to you? Or at least like, is there a scale from 1 to 10 here?
I'd like to wait till Thursday, but
Well,
I
Thursday,
I feel like I feel like
I saw
sometimes,
your tweet, about 20 minutes
yeah.
ago. Yeah.
Well, that's what's going to decide it, because there's
Oh,
indicators
I already
called
know that. I already know it
there's
will.
indicators called the BBWP, and it's the volatility indicators, Bollinger Bandiger with percentile. And they're at the lowest levels they've been on Ethereum and Bitcoin for years. And what that really means, folks, is whatever direction the RSI is pointing on a high time frame, when that BBWP comes up off the floor, it's going to head that way in a major move in either direction. And
One of
so,
the, oh, go ahead.
yeah, and it looks like, I would assume, and I haven't checked because I haven't checked charts since this afternoon. I would assume it's coming off the lows since we're down to 18.3.
Bitcoin's actually, I'm looking at it right now, and it's actually, yeah, it's bouncing, but it's still in that kind of tail candle from yesterday. So it's still near the lows. 18.3 I'm looking at right now.
I see it.
But
I think it's going to fill that wick first
it,
at 17, back down to 17.2-ish,
yeah,
17.
yeah.
But, I don't want to say that because I don't know the future, but I don't like this. And so,
And
as for financial institutions, I think it's going to affect them. I honestly do, to a degree. I'm not sure how much, but sometimes you see Ethereum and Bitcoin leading, and the structures
yeah,
were very similar before this happened. And obviously ES and the futures are sitting just kind of idle the last few days, barely moving. We had a little bit of an up and down move today, but
yeah,
nothing compared to crypto. And so,
right.
if it unwinds past lower than 17.2, I'm looking at 13.
That's where I've been saying for a while. I mean, you look at the what Bitcoin's done really over the last couple of months. It's just a big bear base. It's an inside
Yeah.
bar, kind of, just consolidating there, and I think it wants to go there. But
yeah, and people really get upset about this, but once
there's
you're in here
positives
long
though.
enough,
There's positives to it though.
it's wonderful
Yeah,
because you're going to get this incredible opportunity, and and then people don't get that, they get sad. But
yeah,
and I think when it comes to time, you really doesn't click until down the road. But that's kind of the way I see it. I'm
yeah,
excited, not because people are financially hurt, not because people are losing money,
right.
but because of the opportunities that present people and myself. And you can't control the market. You just can get out of its way and ride the wave, and that's it. So
Right. And we'll touch on that again in a second. But so one of the things I really kind of hit on earlier today is, so we had, the news came out this morning. Then Binance said, hey, we're going to help them out this is at 11 o'clock. The
yeah.
equity markets are just in float mode right now. So
Mhm.
the sell in the equity markets didn't come till about 1:30 in the afternoon, and it came out of nowhere, just straight knife edge sell. It wasn't like algos selling on the news this morning. So it's almost as if somebody or a group of somebody's was like, hey, we need to de-risk too. So that's why I kind of brought up hey, is there a possibility that some, big players are looking at this and saying, we don't want to get caught with our pants down either. We're seeing what's going on. Let's de-risk,
Well,
equities,
as well as I
bonds,
do,
de-risk,
that these people are always way ahead. So that's likely
yeah,
what you're seeing. It's a high
yeah,
probability of what you're seeing. They're
yeah.
way ahead of the crowd, and they're sitting on the sidelines waiting to buy again. So
And you look at the like this, the spiders today, the S&P volume was very light, all like it was holiday volume. And it's almost as if, hey, they
yeah,
just floated it up there, get it higher so we can just get out of whatever this is that we can
Mhm.
de-risk. I mean, we saw what they did to Dogecoin recently.
I seen that.
I mean, is that not pretty suspicious looking? I mean, come on.
It is, and it's the same thing, and it isn't retail, and it isn't traders either,
Oh,
because
yeah, not absolutely.
retail doesn't have any money,
No.
and not saying that's a bad thing. They don't have that kind of money to push
No.
Dogecoin or chip or things like this. So what they do is they start a candle and they run it up and have people join in and they drop it on them.
Yeah.
That's basically how it works.
Yeah.
And so
It's yeah. It's the oldest trick in the book. So
because I traded Doge last week and I did okay on it. I did well on it, but I only did 2 trades with it and then I was busy. But Yeah, I've seen it
Well, and
today.
it's okay if you once you know the game, you can take advantage of it. But
Yeah,
yeah, the
yeah,
average person doesn't, and it takes years to be able to understand how to do that. So
it does, and it's kind of anything that's worth doing takes time. So
yeah, absolutely. So we kind of talked about, so a minute ago we were talking about people getting like angry and like think it's a bad thing, it's it's going to crash or whatever, this and that. But I've said this before in the past, even going back to, I mean, you saw the froth in 2020 and 2021. It was kind of like the Reading, and we were just saying earlier, you're like, I don't know how they made these ridiculously bad bets. And it's an excess valve of liquidity from, the Federal Reserve and everything, and that's
yeah,
promoting terrible investment. This is a good thing because it's very like reminiscent of, the .coms, where you have all these basically worthless stocks that aren't going to make it. But the ones
crypto
that
too.
will the ones that will make it are very
Mhm.
good. But
Mhm.
we need to weed out and get rid of all that froth first, and that unfortunately causes pain. But
Mhm.
that's what needs to happen. So in the long run, it's actually healthy.
Yeah, that's exactly. It's like it's kind of like alchemy, right?
Right.
Refining and stripping down to nothing and then rebuilding. And this
Yeah.
will happen again, I assume. And these things happen in cycles. You look at some data of cycles and 20-year cycles and 50-year cycles. It's pretty interesting that this is a year it's supposed to happen, and next year 2023 is the bottom where you accumulate, and then 2026 you sell.
Yeah.
Maybe somewhere in that range. I'm not saying that specifically because I don't know for sure, right? So.
Yeah. Well, I like my cycles here.
Mhm.
But yeah, and I mean there was I don't know if you saw the unusual whales. I saw a bunch of, but there was the Coinbase too this morning, gap down,
Right.
rallied up, and then there was the massive dark pool prints at the exact high of the day, right before, you know. So it's I'm kind of concerned here, and it's just for the market in general. I mean, we had
Yeah.
Credit Suisse going on a month or so ago. They had a liquidity swap that kind of just
Hmm.
got swept under the rug, and it's like,
I
oh,
remember.
we're just gonna forget about that. That's not news anymore. I haven't heard anybody in the mainstream media talk about the inverted yield curve that's been inverted for 5 months or so now,
It's bad.
and 3 month and 10 year now as well. And it's like you get all these little things that should be massive news, and it's all ignored until it isn't.
Hmm. Until there's a
And
problem.
yeah,
Well,
and I think yeah, Thursday you were saying that's kind of where I've had penciled in as well. So
what I'm looking at is and I'm out of the way. I'm just waiting now. I'm not taking risk on until I have a direction. But yeah, as far as I love your analysis of bonds and the VIX and things like that because it really puts a finer point on what's happening, a well-rounded finer point on what's happening in all the markets combined. Because a lot of people don't take that into consideration, and that's why I see this all the time on other traders in CT and YouTube, and they're calling bottoms. Well, is it? I mean, and they say that so confidently, and I think
right.
that's what more than anything because they really don't know. In retrospect, usually the bottom is in the bottom's always here when it's really bad still, right?
Mm-hmm.
But you don't ever find it until retrospectively. Like macro indicators can help, but ultimately you don't know it's a bottom until you've moved on past it for a while. And
Yeah,
then and when you're talking with your bonds and VIX and things like that, they're helpful as well. So.
yeah. Well, and the bottom line is that like a lot of, I mean, certainly a lot of newer people are in this business now in the last 2 years or 3 years, and it's just a simple thing of how the financial system works. The Federal Reserve has to get the Fed funds rate in line with the 2 year Treasury note yield. As long as the 2 year Treasury yield is continuing higher, the Fed has more work to do,
Yeah.
and it's it's really honestly, I hate to say it, but it's almost like that simple. But that's just the nature of it.
What what percentage do you think it would take for them to get that to move downwards? Because I'm not sure there is one.
I think they're betting what they're hoping is going to happen is the market is going to essentially do the Fed's job for it. So eventually things will get so bad, we'll get so pushed into a recession that investors will eventually just start bidding up the 2 year and front run the
Yeah.
Fed, and it'll get it close. They don't have to get it exactly onto the dot, but it's got to get to about within 10% or
Right.
so, 15%.
Right.
And
You
that's
know,
where
I've
it goes historically.
right. Yeah. 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 Okay. And like when you were saying about younger people coming into this business and a bunch of new people, and like I wanted to touch on that a little bit because I don't blame them. You know, what opportunities are there out
Yeah.
there today? And universities offer just garbage. What, 80% of degrees you can't get a job with after? It should be illegal to offer, not illegal, but they shouldn't be offering this stuff. And I have a friend who's a professor, a mathematics professor at this university in Nevada. And she told me once that every single year she's been there, they've decreased academic standards to increase enrollment, to increase their revenue. And it's
Yeah.
just, come on. And so
And,
these guys that are coming into the profession, I don't blame them. Welcome, come and learn, have
and,
some fun.
and they're, and it's the thing is, they tell you in high school and everything, oh, you have to go to college, otherwise you're going to be broke. And it's like, you can start a business, right? You can
Right.
get a trade. You can be an electrician and not have any
Mm-hmm.
student debt and make six figures if you're good enough at it,
And there's like six-figure jobs for people who fix heavy equipment. I think they make 150 plus. You
Yeah.
know, like there's
And
tons of jobs we don't have debt.
yeah, they'll push you into getting a degree in philosophy and having six-figure debt that you can never pay off.
Yeah, that you could have,
So,
read a few books and you got it down, right?
yeah.
But you
Um,
know, all you need is Marcus Aurelius. You don't need to know the rest of them.
yeah. And I mean, I did, it was it's kind of going back to like backstory. It was kind of the same thing for me. So when I got out of school, I did like literally one semester in college, and I just, I couldn't do it. It's just I'm not meant to learn in the classroom, and I don't think everybody is.
I
And
wasn't.
yeah, no, but I don't blame people for getting into it either, because we've just had this financial repression since 2008 where
Mm.
the market was supposed to crash, prices were supposed to come down, they didn't let that happen, and now
Mhm.
everybody who was coming of age at that time, the millennial generation, is just permanently priced out of the market.
And
And
they're gonna
you,
suffer.
you, you give them
Right.
stimulus checks, what are they going to do?
Mhm.
What's $1,200 going to do if I have no money
Right.
to my name? I might as well gamble it all on GameStop or
Right. Yeah,
Dogecoin or something.
because it's not gonna get you ahead.
Right.
You know. And like, there's another side of that too. When I was like, before, because I grew up with nothing. Well, we had a lot of family and love and all that stuff, but we didn't have a lot of things. And I remember when I graduated, I started working as an MP and I started doing well. And, I found out like to be an accredited investor, you have to make like a minimum of $200,000 a year, have $1 million in assets, to have access to these things like a pre-IPO, right? Right. And
Yeah.
who can do that? Even docs I know that are primary care docs don't make that much because they make 150 if you're a primary care doc, or, depending on what state you live in. So, there's these things that people don't have access to, and especially newer generations, and they should be a little bit pissed off about it.
Yeah.
And so coming into crypto, coming into traditional finance, coming into these markets, hey, if you can get good at it, you don't need to worry.
And
So
that's the thing too, is like a lot of the like we were saying earlier, almost every one of the traders that I've ever interacted with, every one of my members and everybody I talk to every day is better than every broker I've ever met. Like it's not even
yeah,
close.
right. And
It's not even close.
yeah, do you ever have family ask you about the market? They think you suffer because the market went down. You're like, no.
No,
Like, they
no,
don't get
yeah.
it because their stuff is tied up
Well,
in an index,
no.
right?
Yeah, I hear from mom all the time. What if the market crashes? Well, I'll just probably be short, like I'll be fine.
Oh, I've been
Yeah.
crashed. They don't get it, right?
Yeah.
But it's funny, yeah. And so, but yeah, and that's interesting to me how the public perceives traders too, because they think when the market goes down, we get hurt by it, and well, not really, because I can have access to pull my funds. And that's
Right.
another thing. Even if you're not trading, like, I mean, the public with a little bit of knowledge, and maybe they should be doing this in college instead of what they're doing, could do so much better at investing their own funds in like a dividend stock than these Charles
Yeah.
Schwab's and
Yeah.
Vanguards are doing.
Just
So
yeah, buy a bunch of dividend stocks. And I mean, you they'll have these fund managers that they literally will just buy index funds. They'll be overweight Apple. If you're lucky, they'll be overweight some growth stock like ASML or Nvidia. But then they're also way exposed, whenever there's a bear. But you look at their returns and it's the same. You might as well just save the money, not pay them and just buy the S&P Spider and just forget about it.
Yep. I agree completely. They're a completely useless class of a workforce to me. So,
Yeah,
but
much like
people have been trained to not rely on themselves and not, think they can do things. They think professions often are romanticized, and and that they're not smart enough, and it's completely untrue, because with a little bit of training and a little bit of experience, you can absolutely do these things.
yeah, absolutely. And I think that that's kind of been lost. Like we're like I was saying, no schools teach you how to start a business. They don't even teach you like that concept, and it's like, but that's like the most dangerous and challenging thing you can do, right? Like entrepreneurship's, jumping out of a plane, building your parachute on the way down, but you become so much more resourceful from doing that. And trading's the same way. I mean, the minute I quit my job, I was trading and working at the same time, and I was, working less and less and trading more and more. And I found out as soon as I quit, I found out I was using the job as a crutch. And as soon as I quit, I actually got so much better because now I didn't have a choice. I had to be good. And,
Yeah, your back's on the wall.
Yeah. So, yeah,
Yeah,
I mean, it's just, a lot of it's just
great.
being able to believe in yourself and having people around you that are going to tell you
Right.
to believe in yourself.
Right. And it's accurate. I think that's a great way to look at it. And people get scared of this. Well, I mean, is your job that great? Because a job is always going to be there. It's always
Right.
going to be there. It's not going anywhere, if that's what you're worried about. So I encourage people to come in, and you're going to get your butt kicked at first. You can't be good without it.
Right. You got to pay your tuition. That's what I always say. Like, if you want to be the best surgeon in the country, you're going to pay six figure, probably 200,000 in student loans. And then
Absolutely.
you can then 10 years in school, and then you can just start to practice.
Yep.
And then, probably another 10 years before you're considered like one of the best. Well,
yep.
what makes you think you can just come into the markets and be like, making hundreds of thousands of dollars a year in your first year?
Yeah. Yeah. The only people I know who've done that, have lost it all.
Yeah, exactly.
Because there was been a bull market, worked out well from then, didn't work out so well when they got chopped up.
And you don't build the discipline, right? So the only way to build the discipline is to know, oh, I did this, I FOMO'd into this, I'm not going to do that again. Or, I shouldn't buy this breakout, or, with zero discipline, you know what I mean? And, I shouldn't, use all my leverage on this one high risk, you do that enough times, you stop doing it. And then that's how you learn to win, is when you stop doing the stupid stuff.
The pain really sets in after a while. I've been there. I liquidated a couple accounts, right? We all have. Very painful stuff, money that could make you sick, that could have helped your family. But as long as you're there and you're steady and you're consistent and you're providing and you're still doing your trading and you're still doing everything, you're fine, right? You just got to step back and take a picture, take a view of the whole picture if you're someone who's just starting out. So,
you got to look ahead. Like, when we're 21 years old, we think that if we're not a millionaire by the time we're 30, we're a failure. And it's like, but you haven't even started yet,
Yeah. If you're a millionaire at 21, your parents are millionaires.
Yeah, exactly.
Yeah.
And that's how you get to be an accredited investor, as a matter of fact. You start off with a trust fund, and then you get, yeah.
Well, there's some companies who execute warrants that you have to find them that will allow you to invest in their IPOs and stuff at certain time frames during their initial investing portion. But certainly it's interesting that they have it that high. Like
I want to say, go ahead and finish.
Nothing. I was, it's too high of a bar. If you're a couple, maybe you can make 100K a year together. That should be sufficient. I'm not saying that is sufficient, but like it certainly should be lower than what it is for people to have access to these things, because there are very intelligent people that can do well in this market, right? That may not have the access to the capital. And that's another thing, guys. And Aaron, you know this too. If you don't have capital, if you don't work on building capital initially, I mean, the more capital you have, 2% turns into 5K return, 2% turns into 10K
Yeah.
return, and on it goes. But that capital has to be built. And a lot of people think they're going to build capital by investing in one or two things and just holding them. And that's unlikely to be true. You need to compound. You need to understand how to take profits and
Yes.
execute, and then move on, right? Because you're not going to ride something 1,000x, even in crypto. I don't care. Like, you might catch one, but you're much better off catching like 100 3x's and taking money consistently out of the market. This illusion that you can get rich quick, you can try it. I certainly did. It didn't
Yeah.
work out well.
Yeah. I 100% agree with everything you just said. It's my strategy. I always tell people my strategy is it's a rinse and repeat. So I make 5%, 10% here, 15% there. And I still, I still think that stock might go up 30%, but I just get out. Now I have opportunity costs because now I can go to the next one instead of being stuck in this for the next 6 months.
Right.
And, whereas with, like you're saying, like buy and hold, yeah, it could work. You might get a 5-bagger, but how many years did it take you to get that where that money was burning a hole in your pocket? Whereas I have access to my liquidity at all times. I can be out of anything in seconds if I need to.
Yeah. And the only time I plan on going all in is when I see a bottom. Then I'll put half of my
Yeah.
capital in and ride it and then trade with the rest.
Yeah.
But and that's a great point you're making, and you understand it very well. You can tell by your videos that I'm taking profits here. I'm not letting this get away, and that's going to be that, and that's why you're successful.
Yeah. And you got to tell yourself, it's hard to do. It's hard to build a discipline, but once you get over the fact that you don't have to hit a grand slam every time, and you can just say like, oh, yeah, we made 12%. Okay, I'm gonna book it. I don't care if it goes up tomorrow. I could not care less. That's
right.
It's absolutely beneath me.
Right.
And once you get to that point, then you're winning. You're gonna not be stoppable. So
yeah, and but you painted it perfectly. I couldn't have said it better.
Yeah. Well, anyways, let's get back over and we'll talk about a little bit more. So we talked about Thursday.
Mm-hmm.
I have some kind of suspicions of what I think is going on. Obviously, the CPI number is going to come out, and it's almost like that after today is almost become an afterthought. I know when I was setting up my video this morning, or not setting it up, but when I was kind of thinking of things that would kind of be the narrative, as soon as the stock market really took a dump, it kind of derailed everything.
Mm-hmm.
It's almost like the market has kind of just forgotten about CPI at this point. But
you're talking
that's
about
kind of
the complacency.
Yeah, we talked about the VIX and being down pretty much, almost every single day for the last month. And ahead of an election, people were asking for it. It was like
yeah, I agree.
A month ago, yeah, there were too many puts, but now there's probably not enough. Yeah.
Yeah, I remember. And the market overall, I base a little bit, and I base a little bit of what I do on intuition, as do you. Like, just, I can't explain it, but something's there that points me, or I feel a direction. And sometimes it's wrong, but more often than not, the gut is right. Like, once you're experienced.
Yeah.
And I don't like the way crypto behaved today. Macro structure was broken, and equities too. They don't look right. I just don't like. We haven't. I honestly think the COVID lows, it's further down there, but it's an interesting target when you talk about hot CPI numbers. The Fed was very, very specific, and I don't know why people thought this was bullish, but they were very specific and saying, no, we're not going to take our foot off the gas. We're going to keep going next month too. And people were like, that's awesome. I was like, okay.
Well, and that's the thing, though. They've been Pavlov's dog reacted, trained to react that way every time. Where the Fed's gonna save us, and I don't see them coming in. And as long, like I said, as long as that 2-year continues to sell off, they just hiked by 75 basis points, and the 2-year ran by 33. So half of their hike has just been negated.
Right.
They're just continually getting more and more behind, and people are like, oh, well, they're going to pivot. It's like you guys don't understand how the banking system works.
I
It's not
know.
how it
And banks
works.
are doing terribly too. And I feel like no matter what the number is, unless it's
The
something
market's already made its mind up.
astronomically amazing, like that can say, well, and like they wouldn't have a choice but to say, you need
It
to
would
change
have
that.
to. You would have to really like if
Yeah,
they're estimating 8 point. If it came in at 6,
there.
but it's like even that is still historically ridiculously high.
Yeah.
Like let's say
And
they
then they're
estimate
like, okay,
8.1
well,
and it comes in at 7.9. That's still not even, that's
you
not good
know,
enough.
you're right about it all. And I'm like everybody else. I hope it rallies. I don't want to just sit here. It's not fun when your friends and
Yeah.
everybody else are making money, but we got to be realistic and like get out of its way, because if you can get out of the market's way, that's all you have to do, and wait until, until you can buy. And that's basically it. But I feel like the market, and I don't want to say this because I could certainly be wrong, but I got a feeling we have a little bit ways to go further down, and the numbers really not going to matter. And I felt that in the Fed speech last week because of what they said.
Yeah. And like you was just saying, the market makes its mind up before the news comes out. And that's something that you learn from experience as well. And you can see that in the charts. My thesis last week was the Bulls had every chance to push us above 3,900. Why
Yeah.
they had it lay up and they
Mm-hmm.
didn't do it. So that's a huge red flag to me. You talked about targets. I think we have to go retest at least the pre-pandemic highs. I've been saying that for a while, and it's not even that far away now. But
No. And yeah, absolutely. That's one thing for sure that like people should feel okay about right now, because I mean, a lot of the pain is done. you know,
yeah,
I mean, it could get worse in the recession, inflation, no telling what could happen. But if you're trading markets, I mean, it's got to end at some point. I'm
right.
not sure how much further it has to go, but we've come down quite a ways on everything.
And the thing is, too, the way the bear markets end, the the downside is very fast. It's over fast. It comes down fast, and it's over fast. But you get that slow grind for months and months and months, and that's what causes the end, the capitulation, the just waterfall selling at the end. It's you've been grinded down for months and months, and now you finally like, I can't take it anymore, and that's what caused that massive dump.
Is that what you feel like is happening soon?
I feel like it's been getting there, but it takes time to brew, and even when you think it's
Yeah.
about to happen, sometimes it doesn't,
Yeah.
and sometimes it happens when you don't expect. Like I didn't think. Well, I kind of all right. I did have a potential cycle pivot for today. I had no idea what it was going to be, but
Right.
I mean the FTX thing, that was a total black swan. Nobody knew about that.
Yeah.
Nobody was,
Yeah. Yeah. I had no idea. I knew they might be having difficulties yesterday, but I never imagined, you got the Tom Brady, you got the commercials, you got this, you got that. And then you just got this empty shell of a company that has nothing.
And did you see I mean, they just posted that the video of the Miami penthouse like yesterday that they just bought for their new office. And it's like
Right.
that was them yesterday with like whatever, how many hundreds of billions of dollars in market cap
Yeah.
was, and now it's in a day.
Yeah. And that goes to show that more frugality is needed in the business. You don't need a Miami
Yeah.
penthouse to do business. You don't need to look that fancy. The most successful businessmen I know, they don't spend like that.
Mm.
They take care of the people around them. That's how they spend their money typically, right? And
Yeah.
it's usually trust fund babies or people who are ungrateful for their money that spend like that.
Yeah,
Just my take.
absolutely.
So, you know, and but we're gonna get through it. So
That's yeah, you just got to stay positive again. And again, just like being in your trading journey, you're going to get through it. There's times where it doesn't seem like you're going to, but the only way you can fail is if you give up. Really, that's
right,
it.
that's it, and 100% fact.
Yeah, awesome, cool. Well, we're gonna wrap it up here. Anything
Okay.
else? Any other
No.
thoughts on FTX
Uh,
markets moving forward here?
Well, I don't think there's any much left of him moving forward. Um, I don't know how Binance would delineate the exchange and kind of what they plan on doing with it. Just become another Binance, or they're going to absorb it and kind of wash it away. I have no idea what they would do. But the unwinding, I don't think we've seen the end of it. I think there's more things
No,
wrapped up
no.
in this.
Yeah.
So if I were an investor right now, I would stay out of its way for a little while, unless you know what you're doing, you know how to trade, you know what you want. Some people are comfortable DCAing here, and I don't blame them. It's okay. You want to throw 10% here, 10% in a month, do what you got to do.
Hmm.
But this is not certainly something I would go in all in on or trade right now, like if I didn't know
Yeah.
how to.
Yeah.
So, but Aaron,
And
man,
because
thanks for having me on, man. I appreciate it.
oh, absolutely. I'm glad we finally, I know we talked about it a couple of times. I'm glad we finally did it. Love to have you on soon in the future.
Yeah, absolutely.
Yeah.
Love to come back.
Awesome. Yeah, real quick, where can everybody find you on social media, etc.?
All I have is Twitter. It might change in the future, but that's all I have. My name is on Twitter is Crypto Fundamentals. Pretty easy to find. Um, and I'll post a video on my page as well when Aaron gets done uploading it and yeah, putting it out there. But yeah, that's who I am. So I appreciate it.
Awesome. Yeah. Appreciate you, man.
All right, thanks, Aaron.
All right. Yeah. You take care.